and welcome to the North Tech webinar series powered by Accubits. For centuries, mankind has used Polaris, the North Star, to navigate and explore the world. Inspired by this, the idea behind our webinars are to discuss technologies, innovations, and explore its impact on navigating us to a better world and a brighter future. My name is Shamir Taha. I'm the Chief Strategy Officer at Accubits, and I'll be your host and moderator today. This webinar series is an initiative of Accubits, a leading business transformation and engineering services firm focused on emerging technologies such as artificial intelligence and blockchain. Welcome again. In today's episode, I'm joined by industry thought leaders and experts in the fintech and insurance domain, where we will talk about the fascinating breakthroughs in fintech. Today, we have with us an amazing lineup of panelists. Let's have a quick round of introductions to the panelists who are with us today. We have Dr. Sanjay Tyagi, who is the founder of Software Technology Parks of India and the CEO of FinBlue, India's best incubator for fintech startups. He has over 25 years of experience working with several government organizations in tech consulting, strategy development, policy formulation, performance management, performance measurement, budgeting, and resource mobilization. Glad to have you with us, Dr. Sanjay.
Thank you.
We have Dharmesh Mistry. He's the CEO of Ask Homey, a platform that helps property developers deliver groundbreaking and exceptional customer experience for their buyers. He has over 30 years experience in technology and management and has a proven track record of delivering transformational innovation. He was instrumental in the automation of Lloyd's TSB's branch offices and re-engineering of the bank's core business processes. He has also led the tech strategy for NatWest Card Services and introduced the concept of banking as a platform. He was also the Chief Digital Officer at Temenos, which was recognized by Gartner and Forrester as a leader in digital banking. Good afternoon. Welcome, Dharmesh.
Good afternoon, and yeah, it's a pleasure to be here. I'm very honored. Thank you.
We also have Shivakumar. He's the CEO of Sequentis Consulting and the founder of Simplify, an innovative AI solution that simplifies motor insurance claims. He has over 25 years of experience and has a track record of delivering value to customers and shareholders for leading companies such as HSBC, Mashreq Bank, Etisalat, and Gallup. Welcome, Shivakumar.
Thanks, Shamir. Great to be here.
We also have one more panelist who is currently emceeing another event as well. He will join us shortly. His name is George Sebastião. He's a person to be reckoned with in the blockchain space. He's a CEO and board member of Global Blockchain Association. He's an international ICT speaker and a seasoned CTO with over 30 years of experience across various domains. He speaks 4 or 5 languages and learning a few more to my last count. He will join us shortly as well. Now, before we begin, for the audience joining in today, a very warm welcome to you all. Feel free to use the chat window to leave any questions that you may have for our panelists here with us today, and we'll do our best to answer them towards the end of this session. Today, we'll hear from our panelists on a wide range of interesting topics. We'll try and make this more of a discussion rather than a Q&A. So I'll urge all the panelists to share their thoughts on the questions that go around. So to start off with, Dr. Sanjay, what's your outlook on the performance of the fintech last year? And what are the challenges brought about by the pandemic that we've seen? And how do you think it has set up the stage for 2021?
Thank you, Shamir, for having me over here, and good afternoon to all the panelists and viewers. In fact, the last year was quite a challenging year for everybody and for the entire world, and same was for us as well. And the affected industries varies from the different domains. There were domains which were most affected, there were domains which were less affected, and there were domains which has actually got benefited. But all those who got benefited and all those who are actually affected, one thing is very clear for them, that they have to find new ways to come out from this different and extraordinary situation which a pandemic had created for us. There was various discussions going on where we are trying to find out, being the government of India, that how to help these small and medium entrepreneurs to bring them back to the mainstream, and how we should help them, and how in this troubled time when they, the wind of the change is blowing, how we should try to make certain windmills which translate this energy into the productive energy. And that is how we are finding that technology is the refugee for the coming out from this turbulent time. And we found that the 75% of the small and medium entrepreneurs, and these people, they have moved on to the digital platform, and they found that the technology is the only refugee for coming out from this extraordinary situation. Digital adoption rate has gone as high as 90%, and we have seen that five-year fast forward, digitalization of the businesses has happened. The individual have shown the agility to learn the new platform, and that is where we find that we should try to, as I said, that we should try to make the windmill. And STPI have taken this initiative to set up the Center of Excellence in FinTech, and we feel that we will be able to encourage more FinTech startups to try to create the problem statement and also the solution for the people who are waiting for such type of solutions.
So you're definitely seeing a lot of new startups coming up with innovative solutions trying to address the first movers, or the new entrants to the fintech domain. Are you seeing any innovations happening in projects around financial inclusions for the unbanked sector, or any of those projects coming up?
So this is the first time I am hearing from. I have read some survey where all the CSIO of the financial institutions have said that all these fintechs are actually not a competition for us, but we are looking forward to work for them. And they are using this opportunity to outreach to their customers, and they are trying to give them a better experience of the coming on board of the banking system. So they are using this opportunity to go digital, to reach out to their customer, and not only in the payment domain, but also in so many other domains where they found that technology is the only refugee for them. So I think yes, the technology is now all pervasive, and not only in the payment domain, not only in the lending domain, insurtech domain, regulated tech domain. There are many domains which are coming up and becoming very, very prominent now. So yes, and all the enterprises are looking towards the technology.
Just to add to that, Shamir, I mean, from the whole financial inclusion bit, particularly now with the COVID and the impact of it, and there's so much of credit requirements now coming, particularly from the MSME kind of segments. There is need for people to move away from standard collateral-based lending and stuff like that. So to that extent, I think new fintechs are just emerging there, where they're looking at all kinds of other ways of establishing creditworthiness, right? Be it payables, be it all kinds of stuff. So I think this is a space that will grow rapidly, driven by what of the events of the last year.
Thank you for that. And Dr. Sanjay, did you want to also present something on the screen?
Yes, if you're all good for
We
that.
also have George, who has just joined us. Welcome to us.
Yes, I was on a master of ceremony at the ongoing Agora event at the Intercontinental Festival City, and I just ran from the stage to catch the Zoom session. So it's okay. Somebody else is taking over my role there for the time that I'm here. It's a pleasure to be here. It's quite interesting because it's a very hot topic, and I do believe that as long as we focus on several things, of course, this technology brings extremely advantage and intermediation capabilities, much lower cost of execution, much bigger agility. It gives us the capability of implement what we call a vision of what we sometimes refer to as the virtual bank or the neobank functionality. this is on the plus side, and there's lots of other cases. One of the most interesting cases I saw today is an implementation of this technology to be used in the gig economy, where people who are participating in this gig economy, and I'm not promoting any specific project, but allows through what's called a DAO contract to automate the distribution of the people that are participating in the project. So lots of automation going on. On the negative side, of course, things that we have to address is compliance, legislation, KYC, AML, cost of transactions that is not stable, security because of the vulnerabilities with the smart contracts. And the list is very, very long, but I think it's a balance that we need to weigh properly. But it's like any other technology. With the right company that helps with the right maturity level, I think you can achieve amazing new features with this technology.
Absolutely. Thank you for that, George. Dr. Sanjay, over to you.
Okay, thank you. Are you able to see my presentation?
Yes, we can.
Okay, great. Thank you very much. Good afternoon, everybody. And thank you very much for giving me opportunity to talk about the breaking barriers into fintech innovation. I am Dr. Sanjay Tyagi. I'm Director STPI Chennai, which is under the Ministry of Electronics and Information Technology, Government of India. I'm talking about one of our new initiative, which is FinBlue, which is a Center of Excellence in FinTech, where we have given the name FinBlue, where unrestricted, Fin stand for finance, and blue color represent the unrestricted, unabated growth. So where unrestricted, unabated innovation is taking place, that is FinBlue. Before going ahead, I would like to give an overview of the STPI. STPI have been there for last 30, 40, 35 years in this country. And we have been the manifestation of the economic liberalization, which has started in 1991. It has manifested through the STPI for the IT, ITS, and the ESDM industry. We have been the forefront for the Government of India for implementing all the fiscal incentive schemes for the IT industry. We provide the datacom and IT infrastructure management services as well as and incubation services, and we facilitate and actually the government industry academia relationship. So these are the 4 objectives for which the STPI have been formed in 1991, and the achievements, the key achievements have been that we have provided the accelerated growth of the software export from the country. We have created a support center for the small and medium entrepreneurs, accelerated employment generation, as well as the vehicle for the uniform regional development in the country. So these are the four key achievements of the STPI of this organization in the last 30 years. If I can say that the first flywheel through which we have become a $1 trillion economy was the IT services, which is started in 1989. And which has resulted in becoming that we are having a $207 billion as far as the IT economy is concerned, out of which $147 billion is the export, and we are able to generate 4.3 million direct jobs. And one direct job create 2 more. So that is the IT service which has brought us so far. But if we have to become a $5 trillion economy, we have to the next flywheel for that shall be the startup ecosystem, and we have understood it well, and we are trying to set up the startup accelerator program in our country, wherein we would like to nurture the startup ecosystem. The projections for 2025, we are going to be 100,000 startup. We are going to have 325 million jobs will be provided, and the market value of these startups shall be more than 500 billion. And there are many SMEs who will be lifted, and they will become the unicorn. So the India's evolution as a progressive fintech nation has actually happened through this creation of the foundational fintech stack. We are having through this, this is the biggest government and industry collaboration which has happened in the world. And the result is that we are able to have a trusted identity in the form of Aadhaar in place. We are having a trusted data and data exchange in place, trusted consent layer through the eKYC authentication, trusted interoperable and scalable payment platform in place. And we are able to bring in, as you talk about the financial inclusion, we have opened the bank accounts for every citizen. And we have actually included all the fintechs, all the wealth insurance and lending players into this whole movement. And we allowed them to use these open platforms like UPI, GSTN, and DigiLocker to innovate. And this framework has led India to a fintech revolution. This is the result. We are having everybody, literally 1.28 billion people are having Aadhaar. We are having 17.3 billion transactions till 2021, January 2021, and we are having a eKYC where the paperless authentication is possible, and the numbers are growing every day. So all these 4 layers, presenceless layer, paperless layer, cashless layer, and consent layer is actually revolutionizing the fintech sector in our country, and they are actually the means for the financial inclusion of the citizen of this country. The period is 2015 to 2020 when this all has started happening, and the fintech adoption rate has gone high as 90%. The fintech market in India is valued at 25.92 billion, and it is expected to reach 83.81 billion by 2025, and we are showing the CAGR growth of 22.7% by 2025. India will contribute to 2.2% to the world's digital payment market, which is 12.4 trillion. And we feel that we will be able to contribute 2.2% of the world digital payment market by 2023. If I talk about the present ecosystem, we are having some 2,174 fintech startups. We are having 19% of them into the payment domain, 17% of them are into the lending domain, and 14% of them are the wealth tech. So if I add this up, the 50% startups are dwelling in the payments, lending, and the wealth tech domain. The rest are into the rest of the domain. If we see that the fintech startup ecosystem and the amount of the investment which is coming in, in 2020 we are able to got some $1.7 billion investment, and and it is actually on the move. So we as you've seen, the technology landscape of the financial domain is undergoing massive changes due to the rapid growth of the digital technology, and they face complex challenges of the security and the scale. And we feel that there's a requirement of the research and development in this field, and for addressing these challenges, namely usability, scalability, and the security. And the government of India have taken initiative that why we should not set up the center of excellence, wherein we will allow the fintech startups to come and address these issues. The FinBlue objective was to provide resources in terms of the mentoring, technology support, and funding for the fintech startups to augment the existing innovative ecosystem, focusing on the accelerating nascent startups in the fintech sector, and to develop technology application solutions to achieve 100% cashless transaction or less cash transactions. We are having the partners. We are, as I told you, that we are trying to do this with the industry collaboration, and we have identified the industry stalwarts, which are actually the chief mentor of this whole initiative. And you can see the Intellect Design, NetWest Group, NPCI, Amazon, ICICI Bank, HDFC, and there are so many other, BNY Mellon, Yes Bank, PayPal, TAI Chennai, and the IIT Madras is the part of this whole initiative. We thought that why we should not do it in a very systematic way, and the chief mentor of the FinBlue program is Mr. Arun Jain, who is the CMD of the Intellect Design, and who is the biggest proponent of the design thinking model. So we thought that why we should not sit down and talk with all the stakeholders and find out what is the right model for this fintech center of excellence. And when we talked to everybody, we identified these 6 pillars for the operationalization of the center of excellence. The first one is the understanding buyers' needs. And as soon as we understand buyer needs, it's automatically become the opportunity for the fintech. What is the best practices followed internationally? So we should have the international partnership. What should be the funding framework? And can we benchmark these products which is being developed under the FinBlue? And what should be the policy and technology framework, mentoring and training framework? So these 6 pillars have been identified, and we are trying to operationalize FinBlue strictly under these 6 pillars. If I talk about the first pillar, understanding buyer needs. So we have formed a panel of all the banking and financial institutions CTOs, and we asked about them that what do you want from the fintech? And these are the few things which they have mentioned. They want efficiency in the transaction processes, shredding legacy baggage, AI-supported design making and the risk management, contextual banking applications, enabling instant gratification, frictionless experience across all applications, efficient, simpler and accurate onboarding, last mile customer, single marketplace, in-flight simplification. So these are the few comments, few opportunities which has been offered by this financial institution for the fintechs. The another pillar was the international partnership. We wanted to use this for building national agenda, partnership with the global fintech hubs. We want to understand what are those parameters of the global fintech hub index, which we have to strengthen so that we go up in the value chain and understanding the similar fintech ecosystem in the world. What should be the funding framework? What should be the 5 T's that investor look for? Thinking of the individual, what should be the team size? What is the technology? What type of the traction they are getting? Total addressable market, all these 5 T's which we have to create for the startup and tell them. And what are the 6 questions for the startup should be ready to answer to the VCs? Who is the customer? What problem is solved? How is money made? At what valuation? How much to fund? Strategic financial investor. So these funding framework is being developed, and so that we can, in true sense, facilitate the fintech startup which are being, mentored, incubated under this program. Benchmarking of the product is very essential. We thought that we should try to use certain benchmarking framework. Coparis framework is one of the framework which has been designed by the Intellect Design. We are also trying to develop our own FinBlue Startup Maturity Index, wherein we are trying to develop a 1,000 point criteria through which we can identify the product and the level of the product maturity, and we can tell to the world that this fintech product is of this maturity level, and before they leave the incubation program, some sort of indexing we can do. So this framework is also being developed along with the IIT Madras. Policy and technology framework. As you know that this sector is highly regulated, and the fintech startups require a lot of help from the regulatory environment, and we have to ease out certain regulatory frameworks. They need the government interventions for easing out those frameworks so that a new product can be tested in a real environment. And so we try to reach out to all other government stakeholders and bring in all the resources together and trying to institutionalize the sandbox. The mentoring and training framework, availability of the technology accelerator, and we have to choose the mentors, knowing what to ask for, and using the mentor manifesto. We should also understand what is the requirement of a mentor and what is the requirement of a mentee. So there should be a framework, and the belief framework can also be implemented while we are mentoring, and this can strengthen the relationship between the mentor and the mentee. So we, as I said, that these are the things which we are providing under the FinBlue program. We have launched the sandbox. We are having a plug and play facility, mentorship, marketing, monitoring, funding and investment also we are providing, and benchmarking also we are doing, as I just told you. So the constituent of the FinBlue sandbox is the payment gateways, low-code software, API exchange we are having, core banking software have been launched, cloud services also being provided, and IIT Madras is providing some monitoring and the bug tracking tool in the software. So this all have been put into the cloud, which is available for all these startups which are operating under the FinBlue program. This API exchange is right now having 900 plus banking APIs, and we are onboarding 40 more banks into this platform, and probably very, very soon we'll be reaching more than 5,000 APIs shall be onboarded on this. And this platform is highly scalable, secured, and enterprise ready. We are also launched this FinBlue marketplace where we would like to bring in together. This is the buyers and the sellers place where the startups shall have a platform where they can launch their product, and the buyer can come and always put their problem statement over there. We would like to bring in ideas over there. We would like to, through this platform, collaboration is possible, mentorship is possible. We can provide the visibility to the startup, and networking is possible. So this is also which we have launched very recently. And this is, I said, this is the bridging the gap between the buyer's need and with the financial institutions and a startup by creating an ecosystem across the world in an effort to become a global fintech startup hub. And this marketplace will connect industry, investors, startups, and the knowledge partner. We have just finished, concluded our 3-day, event, global fintech event. We call it Fintract 2021. It has happened on 27, 28, 29, where world leaders have spoken, and 3,000 fintech have taken part into this, and the keynote address have been given by the top global fintech leaders. We have also launched our latest cohort. We are inviting applications for the new fintech startups. They can all be into any of such domain: lending, payment, asset management, transaction, and whatever domain they like, but that should be a fintech domain. And we would like them to facilitate and provide them a very, very conducive environment in the FinBlue platform so that they can grow in India. What is the way forward? We are trying to set up a cross-country corridors, fintech bridges. We are looking towards the executable, implementable partnership between cross-country partners, interoperability of the fintech solution for cross-border transactions, co-sandboxing. We are ready to do the co-sandboxing with the similar environment, similar ecosystem elsewhere. Work with the various government for having effective data sharing policy for enhancing cross-border financial transaction, consolidation of problem statements in order to develop world-class fintech products, consolidation of the API, as I just told you, of our policy changes in order to adopt purchase fintech solution in the government purchase. So we have to do certain policy intervention in the government. We are roping in funds for the startups, $10 million. We are going to arrange in next 3 months for these startups, and we'll be giving it to them. And we are also trying to collaborate with RBI Innovation Hub, iHub, which has been recently been launched, and probably our sandbox and their sandbox will be complementary in nature. We will be trying to collaborate with them. Mentor pool have already been created, and fintech, like any other space, require unique skills in order to provide continuous feed of the skilled manpower. So we'll try to see that what type of the intervention from the government is required as far as the changing in the curricula is concerned. So all these way forward have been identified, and I hope that with the collaboration with the different partner in the ecosystem, we will be able to take it forward. Thank you very much.
Thank you, Dr. Sanjay. That was definitely a very interesting presentation and some impressive numbers. Like you said, we are definitely seeing new windmills being created during these winds of change, and the opportunity is definitely now. Fellow panelists, do you have any questions or comments on the presentation you'd like to share with the group?
Yeah, I'd like to say that I think it's very impressive that the country, in effect, has built an infrastructure or looking to build an infrastructure around fintech. Although our leaders, I guess, in open banking in Europe, and we've seen the most growth, I guess, in terms of fintech investment and collaboration, I think the way that the India stack is driving this revolution presents a real platform for leapfrogging whatever's happened in Europe, right? Because we don't have a central payment kind of capability and a central identity. These are the two fundamental building blocks that will hold back any other country. So the fact that you have done this, the fact that other countries, I know countries like Ghana are trying to replicate the same thing, means that you have a fantastic advantage globally. And, well beyond even, places that we think the innovation is going to come from, like the US. So well done.
Thank you, Dharmesh. Dharmesh, on that note, according to you, what specific sector in the fintech space do you think is performing well? Could you walk us through some interesting, say, platform business models and, embedded finance concepts around that?
Sure. Look, so it's the clear out winner so far in the fintech space is really payments, right? So whether it's doing international transfers or just domestic payments, making it much more frictionless, the unicorns are there and they're replicated globally. It's a space that everyone is really fighting for because payments is the fundamental principle, behind any bank is not just safeguarding your money, then how you transact, right? So in that, what banks have invented is lots of friction and lots of cost. Now with digital, all of that's taken out. It's a benefit for the customer. This is where we've seen the most innovation and growth space, and certainly characterized by those unicorns. I'd say behind that, and we're only really starting to see fruits of the benefits of things like open banking, I would say open banking is the next biggest growth area, right? And we're really at the very tip of the iceberg. We have over 200 organizations in the UK that are leveraging open banking. Just to put this into context, right? Metro Bank in 2010 was the first new licensed bank in the UK in 150 years, right? And in the last 5 years, we have 20 brand new banking licenses, but over 200 organizations leveraging open banking. 90% of those are really actually focused on financial services, right? But the 10% is going to outgrow the other by an order of magnitude, because they are focused on new sectors like the property market or healthcare or retail or telcos, utilities, etc. Open banking, it's a misnomer. It's not just for banks to interact with fintech. It's for anybody to interact with banking data. And there's a huge amount of leverage yet to be untapped. And so, I think payments is the kind of the real rails of everything that we do in financial services. It'll always be the number one, right? But a close follower, right? And I think from a data perspective, because my view is that data is worth more than the currency, right?
Yeah.
And so, therefore, open banking will be the number one over time. And I wouldn't necessarily bet my money, on the neobanks, but it's the people that are really driving real frictionless models that are beyond banking services. So they don't necessarily look like a bank, but underpinning partly what they do is a banking-like service. So for example, one of the new models is experience-driven banking or embedded finance. So I could, as a contractor, I could go to a bank and get an account, or I could go to one of these new providers, experience-driven banks, like Coconut, where as a contractor, I can track my expenses, I can issue invoices, they will help me with my tax return, and they will give me an account, right? So it's a whole set of services for the experience of me being a contractor. Another one is like if you're a landlord, you have to collect rent, you have to track your expenses, you have to pay invoices, you have to do your tax return. That whole experience is being managed by a company called Hammock as a landlord, as a bank for landlords. So if you're a bank and you just provide an account, you have to compete with somebody that's providing the account and all these other services. That's a much more compelling model. So those people that are just doing better banking, based on lower cost models, they're struggling financially right now. Even the big players like Monzo struggling financially because the cost model is being eroded as they scale. The value model created by experience-driven banks is a much more sticky. That's really where I would look at, if I was going to create something. Now, on the other business model of embedded finance, it's an opportunity at two ends. One, for banks to provide additional services, so not just be selling to end customers accounts and loans, etc., but to sell to fintechs, parts of their operations, do their KYC, do their credit checks, do their, risk assessments, etc., etc., or even just provide accounts to them to be white labeled, etc. Right? So it creates a new growth model for banks to address the needs of fintechs and other organizations. And that's really, the main kind of business models. Now, we also do have, kind of marketplaces for fintechs that are emerging. So, that bring banks and fintechs together, right? They're at the moment, they're competing. Once they start to consolidate and we find, 2 or 3 leaders, I think that's where we'll start to see more growth. But that's been the challenge in Europe, right? If I look at what's happening with Unblue, again, this is like a leapfrog advantage. If you drive it centrally, I think then you're going to get, the momentum behind it to really, show the rest of the world what actually, a concerted effort could achieve.
True. Thank you for that, Dharmesh. I think, like you said, payments is definitely going to be a key focus, in the space right now. I'm also seeing a lot of, newer business models come around. Even if you look at money exchanges or transfers, peer-to-peer lending, microfinance as well. Are you seeing any of that happen? Is that a focus area in Europe at the moment?
Yeah, I mean, another part of that trend is buy now, pay later kind of trends. Yes, we've already been through those curves on peer-to-peer and crowdfunding, and now we have buy now, pay later. Those tend to be transient because actually end value doesn't necessarily always transpire, right? So we've seen peaks and troughs in some of those things, and I'm not sure how well they will sustain in the longer term, right? But certainly, the base payments of international transfers, remittances, etc., that's here, and I see more players trying to get into that space. Largely actually driven out of Africa. The telcos got into this space, and now we're seeing telcos in the US trying to get into that space as a way of creating, finance for the unbanked. So yes, I mean, these models are sustainable, but there are some which are much more, dubious in their nature, maybe, let's say.
Shivakumar or George, any thoughts? Anything that you'd like to share?
Just a couple of things to add to what Dharmesh was saying. I think this point Dharmesh made about open banking being more a misnomer and it's more like sort of open data. I think that's a game changer. That's where I think once we really get to that point, and there's a lot of maturity, and I can see countries like, say, Australia, for example, have already taken a lead on that, right? I mean, this whole concept of data reciprocity and also this element of telcos, energy, utility, all of these guys not only using the bank data, but vice versa as well. That then transforms this completely. So rather than looking at this as a financial sort of industry act, if one sees this as more as a data act, and then there are basically data keepers and there are data receivers, and then there's a whole bunch of people who create value out of that whole thing, is where the future is, right? So I completely, I'm sort of putting my money on that's where I think any new ventures should really be thinking about and playing a role. And the other bit is, sorry, go ahead.
I'm sorry, I was just going to say that the end game on that is this whole concept of the digital twins. Mm-hmm. I can have a financial digital twin, I could have a digital twin for my house, I could have a digital twin for a city, but essentially I've just turned a physical thing into a data model of something, and that data model I can interact with and experiment with, right? And the opportunities on that are just absolutely phenomenal, right? And this is where we're going to see huge amounts of growth in terms of startups.
Yeah, and the other point I'll say before George, you can jump in, is there's also a lot. I mean, while this is all very optimistic, right? I mean, the other side is also true in terms of how traditional banks, what kind of mindsets they have towards these kinds of opportunity. Because in some ways, if you look at it, this whole idea of open banking thing, what's in it for the bank to now put so much of money in to build all these APIs and also from hold the liability now, because all the liability of what happens in data breach is not clear, and go all through that, and still there are other people who could sort of eat away at their business. That's one way and mindset of looking at this whole thing, which directly then sort of goes to one of the BCG studies I think we talked about. Banks could have a uplift or a downside of about 15 to 20% depending on how they look at this opportunity or a threat in the way they see that. So it's going to be interesting in terms of how the different stakeholders are going to react to this.
Thank you. George?
Yeah, I do believe that there is many things at play here. One is the old and the new. So the old is extremely conservative, risk averse. The new is bold, is willing to take risks. The banks are looking at the new as a threat, but the smart banks are looking at the new as an opportunity to explore new channels or new approaches that were not there before to do business. So yes, I do believe payments is one of the key elements because it's the glue that sticks all the things together. But it's much more than payments. It's about innovative business models. It's about flexible rails to move or accelerate the economy. But different groups are looking at completely different things. If we look at the user, and I'm talking about the retail user, I think the user experience is extremely important. You went into a bank to open an account. I mean, it can be anywhere from a 3-hour agonizing experience to a multi-day agonizing experience. Revolut got it down to 14 clicks. That's it. This is the new standard. You cannot do 14 clicks. You're not, for lack of a better term, you're not going as fast as Tesla. Or I think I should actually even say the new Porsche Taycan, which goes even faster than the Tesla, but you get the point. It's a speed thing. So if you're not able to keep up with the speed, eventually somebody catches up to you. So this drives a whole new adoption much faster. So it enables new people to come into the system that otherwise would not have been able to. I mean, we call this sometimes inclusion, but it's much more than that. Because some people don't have enough money to save to open a bank account anyway. They just want to be able to do their day-to-day businesses in a much simpler way without losing a lot of fees. So they want to economize on costs. If you look at this from the institutional perspective, and some of the challengers like Monzo and many others have challenges, it has to do sometimes with the customer acquisition, with the ARPU and the churn. So if they're buying customers, but they're leaving faster than they're coming, so they have to create more of an ecosystem approach so that there is much less churn and the customers get retained. There's stickiness. So customer stickiness is extremely important so that their business model becomes more profitable. Now, this so far is from a retail point of view. From an institutional point of view, the concepts are completely needed in a different way. So for example, one of the projects colleagues of mine I assisted briefly about is for telco organizations that have lots of purchasing power and sometimes a lot of small contracts, sometimes very large ones, and a lot of adjustments in these contracts. So they're buying pieces for cellular towers or even mobile phones, doesn't really matter. So they're doing with lots of suppliers, and the paperwork that is required to administer this entire ecosystem is just too costly. And sometimes, okay, we order 1,000 phones, 995 arrived. How you do the adjustment? The adjustment is more costly than the cost of these 5 phones that were not delivered. If, however, you replace this entire thing with a complete smart contract-driven approach and a DAO, dynamic organization approach, that means you are actually automating something that before was being done in a manual way. So in this existing mode, the current financial systems cannot compete. So the new smart contract, decentralized approach, lightweight approach saves companies billions. We're not talking about millions of dollars anymore. So the systems pay for themselves just by selecting the right use case. So each one are looking at this technology from the perspective that brings them the most value. And the solutions that we create need to be adapted either to the retail level or the institutional level because the requirements are completely different. Other requirements that I didn't talk about, like for example, KYC, AML, and all that, are much more different between the retail and institutional as well. Other things that happen also in this new DeFi world is that some people are operating 100% on the cloud, which means that there is no physical address for this organization. So who are you going to go after if something goes wrong? So traditional financial systems and regulators don't feel comfortable at all with this. So I think there is to be a lot more ethics, a lot more governance to these new models for them to also get much better acceptance, especially at the institutional level.
I agree.
Can I just comment on the crypto side of things? What's interesting on the banking perspective is exactly what's happened with open banking. First seen as a threat, then realized there's an opportunity for collaboration. The same is absolutely true of digital currencies. First seen as a threat, and we will see eventually that actually it's an opportunity. Certainly some of the banks in Switzerland are starting to open up custodial services, because guess what? These coins are starting to be worth something, right? Where do you want to store it?
Yeah. And that's happening these days. I think people have been quite skeptical at first, considering it a threat, and they see, there's an uptake and demand for certain cryptocurrencies, and people are starting to realize there's a massive opportunity. Even the traditional banks have started to see this as an opportunity. Quite recently, we've seen Bitcoin cross the $40,000 mark. A lot of people said it's never going to happen. So there's ups and downs, and it's an inevitable journey, as I would say. Shivakumar, you're very much involved in the artificial intelligence and insurance domain, right? How do you think these deep technologies like AI are benefiting the fintech sector? Could you also perhaps walk us through how your startup is helping this cause?
Yeah, sure. So, I mean, when you look at all the fintechs that we're talking about and the spaces we are talking about, invariably AI would be a prime driver of their proposition or an integral part of their propositions in most cases. Yeah. So it's almost an embedded part of this whole fintech conversation. That's how AI has come into play. And I think in the last couple of years, it's sort of really come of age. Again, still a long way to go, but it's still moved on from a lot of the POC kind of stage that everybody is used to. Everybody wants to indulge in a pilot and a POC, and nobody knows really what happens to those. But I think now we're starting to see a lot more actual production, getting into production stages and implementation of those. Very broadly, though, I think the areas I'm seeing where in the broader fintech space that AI has started to become real solutions are sort of in the whole fraud protection, detection, compliance kind of space. Largely because they've always been driven by science in the past as well, right? So this is not something dramatically new for them. Plus, you have all these regulatory pressures that have come in, particularly on anti-money laundering and all kinds of stuff. And then there are a host of new characters who have jumped into the hacking space, right? So just with all of these, I think there is a huge demand, and I think suppliers are also, sort of coming up to delivering those kind of needs. Yeah, so whether it's the credit card fraud, MasterCard, and the Brighterion type AI kind of thing, which has been around for a while, but now I think it's the bit on those is about reducing the false positives, right? I.e., not letting these genuine transactions go up as an alert. I think that's where they're stepping up. Plus, also, I think they're seeing a lot of these varied data sources now coming in that they typically didn't use in their fraud protection kind of areas. AML is another classic one where I think financial crimes are on the rise. People are fined. I mean, if you just take the amount of fines that the UK banks have gone through, that explains how much they would be investing in these types of solutions. The other one is just on the other bit is just KYCs, right? So computer vision in terms of identifying people, looking at their identity documents, matching them, comparing them, all have moved the whole process automation the big way. Yeah, so I think that's one big area where I think real work is happening. The other area is sort of, in my mind, a mixed bag, right? It's hits and misses. It's the whole customer service type area. Everybody wants to talk about it, and a few guys have just gotten into it with a lot of enthusiasm and energy, but not with real good sound technology backing them. Which is why we've seen instances where we beat our heads around with these chatbots, which are nothing but glorified FAQs, right? And we've not been able to go through a lot. But equally, there are some really good platforms like the K platform and a few other banking ones as well, which are conversational here. I mean, that's really the game, not just a chatbot which just sort of throwing out your FAQs. So I think that space has been a hit and miss for me. But in terms of activity for AI, that has been huge. If you look at the amount of money people have spent on building those, has been huge. But in terms of outcomes, it's been a few ones which have done really, really well. The other one sort of related to that is the whole process automation kind of area, which is not very exciting, but I think one of the areas where the ROI is proved out instantly, right? I mean, you can prove that in short time, clear deliverables, and particularly in this part of the world, in the Middle East, given the nationalization and limited skills and shortage of people and all of that, this has become one area where large companies are starting to deploy solutions very, very quickly. So I think that's been a great one. The other couple of ones are, hyper personalization. Again, is something that, as we talked about, Dharmesh talked about as well. When we talk about this open banking, we talk about data coming in. People now need to get things that are very personalized to them, right? I mean, it's almost a recommendation engine, nudging and helping people go through. And that's where I feel that's the space to watch out for the next couple of years, right? I mean, I think a lot of the ingredients are coming together, and that's where currently solutions are far behind, right? I mean, a few people are working on taste graphs and habits and all of that, but there's still a long way to go on that space. So those are the kinds of areas I think. I mean, talking about insurance, the one that I've been working with you guys as well, is that it's an area where we're using computer vision to sort of simplify the entire claims area. If you think about claims, there are two real aspects or DNA to a claim, right? One is on assessing a claim, right? What's the damage? Whether it's a property damage, whether it's a motor damage, whether it's a health damage or whatever, you need to assess the damage. And there is a lot of skill involved, but at the same time, it's purely manual now. So how could you, that's a classic case study for an AI tool to come in, right? Now, how do you automate a certain skill level into that? So that's one area where we're working on. And the other side to it is about standardization and transparency that you need to bring about in the remedial of that assessment, right? Whatever it is, if it's a motor damage, how do you repair it, kind of stuff. So that's a space we are playing in. We are working with insurance companies and the ecosystem of workshops and garages and parts providers and everybody, and then providing them value wherein once a customer can actually input that images of those damaged car, and in very quick time, they could be able to get out or get money in their account, if that could be sorted out in some cases. Yeah. So, and we're starting with motor, but we're obviously going down to the whole other verticals within the insurance space. Yeah, all the way up to even crop. And that's another classic AI case where you could use crop. One of the biggest issues on settling insurance claims is yield. How do I establish the yield on it, and how do I know what the price is? And this is where a lot of companies are coming in looking at weather data, all kinds of other data to estimate it. So it's a fascinating time for AI. But while I say all of this, I think I should probably do a few caveats on some of the challenges as well. Some of the key challenges in terms of this AI space is about how do you move from just simple POCs to operating the AI model at scale, right? And that's where a lot of startups jump in, but they sort of really struggle as they go through these implementations. That's something for companies on both sides to look at. The other thing is skill shortage. I think people, in terms of ML skills, are a huge shortage compared to the demand that would come in. And this is where I think auto ML kind of platforms, the DSML type data science machine learning platforms would come in a big way to sort of help people. Last one thing I'll say very quickly is explainable AI. This is something that maybe is coming up more in the developed markets, but very soon I think you can get away by telling people that it's a black box, right? I'll tell you a recommendation and it's coming from this AI black box. I think now you need to explain why you made that decision for that particular individual, and I think more solutions will be worked on that space.
Thank you so much for that, Shimon. Those are some valuable insights. On that point where you talked about using computer vision for insurance, I think that's a very upcoming space as well. One of the things that Accubits is also working on is parametric insurance on agriculture, livestock, and fisheries. So I think that's the need of the hour, and like you said, automation and even process automation. Do you see? I mean, this is what we've seen. Is it the same with you as well? I mean, are you seeing a spike in demand for automation and generally going with the RPA now with COVID and everyone working from homes? Is that kind of accelerated the adoption for process automation?
It definitely does, but I think even before that, Shamir, I think people started to sort of look at the value in it, right? I think when people started to look at that end-to-end process, and then they started questioning different aspects of it. And earlier, I think people were throwing people at the problem, right? They could just hire as many people and they could solve it, kind of thing, particularly in sort of the subcont world and in the Middle East kind of spaces. But I think now with the kind of having seen the proof of how this could really make a difference to people, I think we are in fact talking to one of the companies out of Sri Lanka on applying this to their health claims stuff. Again, it's completely manual, disjointed, and stuff. And this could be a classic case for this. So I definitely see that it was already going on up, and COVID probably would have nudged it a few notches above. But those are things that will significantly help businesses from both a cost perspective and also value, rather than just trying to make it faster, quicker. But it would also generate value in the whole end-to-end system.
Thank you for that. George, you've seen and dealt with a lot of projects in the blockchain and DeFi, literally disrupting and creating innovation. Can you share your experience on some of the challenges implementing such projects? And according to you, what are the most interesting use cases you see today?
If let's first see about the challenges. Challenges are many. The first challenge is the availability of qualified staff. The fact that you have a resource that says they know about smart contracts does not mean that resource has any experience to implement DeFi, let alone neobank solutions. And there's many reasons for that, because it's not just about learning the programming language, but actually learning the API stack and how to handle the flow across this Rails and API stack. It's a much more complex skill and knowledge that is required to be able to implement those solutions. So this is a big challenge. The second biggest challenge that definitely remains, because at the end of the day, we're talking about financial solutions, it is cybersecurity. Because if you're building a system on top of a trusted technology known as blockchain, and the stack that you're building or the smart contracts that you're driving or the dApps or any component, mobile app, web app, is not secure or has some elements of critical vulnerabilities built into it, you're going to end up with a very big egg on your face. And this is a bit of what I sometimes call the elephant in the room, because if you do not address cybersecurity from the beginning, it will come and bite you later on. The banks have learned this the hard way. And one best example of that, banks have invested millions into cybersecurity, but they never invested into simple things like user awareness for the end user. And that was enough to completely destroy their cybersecurity models. The same thing will happen in DeFi fintech approach. So cybersecurity needs to be handled across all the layers, technologies, API, including the end user as well. Another area that I think is extremely important is performance, scalability, redundancy. When we look at the systems like trading platforms, banking ATM systems, a lot of effort goes into making sure that those systems operate 24/7 by 365. And any kind of amount of downtime ends up with substantial risks to this organization. Having a bank 2 or 3 hour ATM system down is a showstopper event for that organization. Today's fintech organizations are still not looking at themselves in the same mission critical approach. So if some component of their architecture goes down, because at the end of the day, even blockchain solutions, fintech depend on cloud environments. And if the solution is growing too rapidly, does not have enough resources, it will encounter. And many of them have gone down for 2 hours to 2 or 3 days. This is again another showstopper for this organization, for their or mission critical approach needs to be driven into the design components. On the plus side, I believe the really innovative use cases, the one that save substantial costs, the ones that add extremely amount of agility, and I would say even the ones that integrate the synthetic world of assets or synthetic assets to the physical ones are the ones that are going to be quite successful. So apart from traditional fintech integration with payment cards, etc., the next big milestone is definitely the integration between synthetic assets and real world assets. Now, it doesn't really matter what those real world assets are. They could be gold, they could be silver, oil and gas, real estate, or any others. Those that come up with the best model to introduce ETFs, to introduce fractional ownership, or any component of flexibility will drive massive adoption and massive scalability into the solution. And lastly, I definitely believe that the more innovative business models that were not there before are the ones that are also going to drive massive wins and massive adoption. One was the example I give you for telecom, because the savings by using smart contracts when you're dealing with suppliers are in the millions of dollars. The cost of developing that application is what, 1 or 2 million. If you're saving 500 million, where is the business case? Okay, how much you want? I can write a triple amount of check because my saving is much bigger than any cost that you're referring to. And the same thing applies, for example, let's take one example I just recently saw. Many of you have probably heard about Fever. Fever is a very successful but traditional application. It's a new generation of application that is helping drive the gig economy. It's not the only one, but there's many others. There's a whole new generation of fintech-driven approaches that are using blockchain, and one of them obviously developed also in India as well, which introduces low-cost approach and not having to pay 30% management fees in the gig economy. So that means that is going to drive massive adoption in cross, even disruption to these newcomers like Fever, because they're going to completely change the rules of the game. See, the things that we see in technology is the status quo is never going to be acceptable. I've been in this business for about 35 years, and I saw all the disruptions that have gone through. Company like IBM, nobody can touch it. The fear, doubt, and unknown that they caused until Microsoft came around. Then Microsoft became big. Facebook came around, or actually before Facebook, sorry, it was Google, came around and displaced some of the Microsoft turf. Then Facebook came and displaced some of the Google playground and so on. So the really point is that if you do not have this agility, then somebody else comes and eats your cake. The last point I wanted to provide, and I think this is common to all the fintech new generation solutions, the major driver that is going to make them winners is they need to focus on the data. The companies today that succeed are the data-driven companies. And why is data so important? Because the data allows you to tune your solutions that you offer to the segments of the markets that you have in front of you. And if you don't have that data in front of you, and if you don't use the big data and the AI machine learning models, you're never going to be able to tune fast enough because it has to be self-tunable. I think some examples talked about open APIs for data, etc. This is all important, but it's the ones that are actually driving the value from the data that are going to be also the successful ones. It's not just about the technology, it's how you use the technology in an efficient way.
Absolutely. Thank you so much for that, George. I think those are some very valuable insights. So I think we can move on to the last leg of our webinar here. We have a few questions from the audience. This is the time where the panelists would answer your questions. So if you have any more questions, please leave them in the Q&A box right at the bottom of your screen or in the chat window. Let's take the first question here, which is posted by Madhu. Madhu was asked, what is the impact of 5G telecom technology on fintech? Dharmesh, I know you've posted the question, so I mean, you would like to answer the question. So over to you.
Sure. It's pretty fundamental. Firstly, it will transform the country because it will massively increase the reach of data access to millions of people. So that's one thing. The cost of and India is one of the leaders in producing kind of 5G technology. So again, this is another thing that we in the West need to learn, right? But fundamentally, what it will allow us to do is allow people to have a data connection on a continuous basis. And that will allow us to generate, even more data. When George talks about data, yeah, data is the new oil, right? But, if I think about what Siva Kumar looks at in insurance, I know in the insurance side of things, for the home, an insurance company has less than, 2% of the available data for a property. And if I start to add in IoT that generates more data, then you're looking at, micro percentage of the data that will be available on a property. If I had the full information, I could do amazing things like predict your utility usage, change your utility usage based around a budget. I could buy you more efficient equipment, et cetera, et cetera. There's so much more that we can do if we can harness the data, right? 5G will enable that by allowing us to stream data on a continuous basis. So it's not a request response thing, right? It's going to be sensors on the devices, your phone or your buckle belt, your watch, etc., that constantly sending data, amassing huge amounts of trend information, which will be turned back into services that provide value to the end customer. So I think, we're seeing a big revolution at the moment by, extended reach. But the real revolution will come when we start to harness an even greater influx of data.
Just to add to that, Dharmesh, the point about more data coming in is absolutely true, and I think the whole M2M kind of thing, they say machine to machine and human to machine kind of data sets through IoT devices is going to boom. I just want to mention this one point in the context of all of this, that there would also be other players. Like, I think the immediate guys who would leverage this straight off the bat would be the MVNO guys, right? The mobile virtual network operators, who are coming in from all directions, right? Whether from a retail outlet to a telco or any of those, and they are the guys, I think, who will be really agile in their business models to capture the power of these data and the capabilities some of these 5G technology will provide.
Yeah, I agree. I mean, one of the other things that this will facilitate, as you said, is like new business models, right? So, for example, today you can buy a book, a physical book. It's slightly cheaper if you buy the digital book, right? You can subscribe to a library, right? Which saves you, having to buy the books individually. But in the future, you'll get pay-as-you-read models, as we do for movies. So, I have a number of books that, I probably have bought and not finished, either because I got disinterested or I just ran out of time or, I found something more interesting. So I would be prepared to pay slightly more per page, if I finished the book, then, and probably pay less because, there's a lot of books I don't finish. The point is that, we'll get to things like micropayments that will create new business models that we haven't seen yet because the technology hasn't facilitated it.
Wait, these business models that you refer to already exist in some way. For example, if you look at Dubai today, you can rent a car by the minute.
Yeah.
And this renting the car by the minute includes not just the car, it includes the insurance, the gas, even the parking, which means that you pay as you use so it's goes way beyond the Uber model by allowing you to be even your own chauffeur and having this on-demand solution. And this can be applied to fintech, can be applied to insurtech, health tech, or any or most of the things that are service-driven solutions.
Yeah, I mean, there's definitely a trend towards hyper-convenience, right? And these things are not cheaper in the long run. So if you're a heavy user of a car, they're definitely not cheaper, but they are hyper-convenient because you don't have to deal with all of this other stuff. That's exactly the same as I was saying about the experience-driven banks. It's hyper-convenience. Do I do all of this stuff myself, or do I wrap it up into a value-added service, right?
All right. Thank you for those very interesting insights. We have one last question posted by Andy. His point is around real estate assets. I think it's a multi-part question. So the question is, do you think the big fintech players today will adopt real estate acquisition with crypto or tokenization of assets? Or new players will have to emerge offering this specific feature? So he's referring to some new crypto escrow services that are already out there or coming up in the US, for instance. He's not sure about what the status of it is in Europe or APAC.
We already have those in the UK. We already have tokenization of property. I mean, there's lots to be thought about, but clearly, you know, the digital currency frameworks at the moment to tokenize, you know, your currency applies to any asset class, right? So it's natural to do it on the property side. Why would you invest in one property when you could spread that same money across 100 properties and not have the risk of losing value on one property, right? And so, you know, I think it's inevitable, but there's a lot more to be done in terms of providing the rules and regulations to make this safe for everybody to use. This is my view.
Yeah, I definitely believe that compliance is a very extreme thing that needs to be addressed, because is the property still there and what's the condition of those properties? Right. However, I believe the fintechs will create the platform. They're not the ones who are going to buy the real estate. It's going to be crowdfunded. And there'll be aggregators that will take that crowdfunding and then go out buying the properties. And then the people have two, in the case of real estate, two up values. One is the appreciation of the real estate, which can go up or down, but they also can benefit from the operational value of the property, meaning renting it out, whether it happens to be retail or non-retail. It could be apartment, could be a school, could be a hotel. So you get two up values. One is operational in nature, and the other one is speculative in nature.
Thank you for those interesting views, George and Dharmesh. I believe we have reached the end of our session. There are no further questions. I'd like to thank all the panelists for their time joining us today and sharing their valuable thoughts and expertise. I definitely had a lot to learn from you all, and I'm sure the audience who is here with us today has also had a good experience learning from you all. Thank you again, once again, for joining us, and thank you to all the audience and members who are here with us on the webinar. We look forward to having you all again on our next episode. Thank you again. Have a wonderful day and stay safe, everyone.
Thank you.
Thank you very much.
Thank you.
Thank you.